Day and welcome to the Aeroflex Industries Limited Q3 and 9 months FY25 results conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star then zero on your touchtone phone. I now hand the conference over to Mr. Asad Daud, Managing Director, Aeroflex Industries Limited. Thank you, and over to you, sir.
Thank you so much. Good morning to everyone. I welcome you all to the Q3 earnings call of Aeroflex Industries Limited. Joining me today are our senior management team and representatives from LGA, our investor relations advisor. I hope that you have had the opportunity to review our financial results and the investor presentation, which is available on the stock exchange and our company's website. At Aeroflex, we prioritize innovation and flexibility to deliver high-value solutions for diverse range of industries. Leveraging our advanced technology and our team's expertise and skill set, we create exceptional products for our customers while ensuring sustainability and maintaining our reputation for reliability and commitment to excellence. I'm pleased to share the highlights of our performance for the third quarter and for the 9 months ended 31st of December 2024. I'm happy to share that our total income for Q3 increased by 35% on a year-on-year basis. Our EBITDA margins improved by 48% on a year-on-year basis. And the contribution of assembly business to our total sales for the 9-month period increased to 49%, which enabled us to reach our target almost a year ahead of schedule in terms of the contribution. We have successfully met our EBITDA margin targets for our year that we had promised at the start of the year, with an increase of 100 basis points in our EBITDA margins. This accomplishment is due to the increase in sales from our assembly business, and as a result, we will continue to focus on strengthening our EBITDA margins by focusing on more value-added products in the near future. We are delighted with the growth that we have achieved in Q3 and the 9-month period, which is driven by our strategic efforts towards increasing the sales of the assembly business and also increase in the sales of project-based orders from the domestic market. We have witnessed a significant increase in sales of assemblies both in the domestic as well as in the international market. This highlights our ability to cater to both the evolving needs of the Indian market as well as the global customer base, reinforcing the value that we deliver across the entire world. The demand from some of the key domestic players in the last quarter is also a testament to our growing presence and recognition in the local market as well. While at the same time, we continue to focus and to strengthen our export business. Our oil and natural gas segment and our steel business has seen an uptick in this quarter, driven mostly by domestic and international demand. On the operation front, we have successfully completed our capacity expansion plan by increasing our production capacity to 16.5 million meters for stainless steel hose and bearing. And additionally, we have also started the production of our metal bellows division. I'm happy to share that we are planning to expand into miniature metal bellows. These bellows are precision engineered components which are similar to metal bellows, but these are smaller in sizes as compared to the larger metal bellows. They range in sizes from 10 mm to 50 mm in diameter and are used in advanced industrial applications. The manufacturing capacity for these miniature bellows is projected to be 240,000 pieces annually, which is approximately 20,000 pieces a month, and is estimated to be completed by March of next year, which is March of 2026. In addition, we are also expanding our capacity of stainless steel hose and bedding from 16.5 million meters to 20 million meters, and it is projected to be completed again by March 2026. This additional 3.5 million meters will be utilized to meet our increasing demand for stainless steel hose and bed and assemblies in the international and as well as in the domestic market. We are also planning to increase our assembly stations from 40 currently to about 70 within the next 1 year. Our subsidiary, which is Hyder, which has its facility in Chakan, Pune, has undergone significant upgrades in terms of its infrastructure, which includes enhancements to the quality lab and to the R&D center. We are also pleased to announce the addition of advanced and new technology CNC machines, and we have also received a major order from the railway coach factory, which has contributed to the growth of Hyder in this quarter. And we are also planning to install more such CNC machines in the near future as well. As part of our commitment to sustainability and for ESG compliance, we have taken significant steps to reduce our environmental impact. And I'm happy to share that we have commissioned a 750 kilowatt rooftop solar project, which will help us significantly reduce our reliance on non-renewable energy sources. It will also help us to reduce our electricity costs and reduce our carbon footprint. As our company scales up, we believe that we need to further professionalize the management, and in order to achieve our long-term objectives of growth. And hence, I'm delighted to share that we have appointed Mr. Kiran Kagalkar as the Chief Operating Officer of the company with effect from 1st of February 2025. Mr. Kiran brings with him more than 37 years of experience in the engineering industry, and he has worked for more than 25 years at Parker Hannifin India, which is a subsidiary of Parker Hannifin US, which is a $20 billion global giant in the industrial engineering space. He was the general manager at Parker India, and he was in charge of the entire P&L of the motion systems division, which he helped scale to an annual turnover of more than 600 crores with a 25% margin. I'm sure that Mr. Kagalkar will be a catalyst in helping us achieve our long-term objectives and goals. As we look ahead, we are focused on strengthening our team as well our sales in both the assemblies and the fittings business. We are also excited about the upcoming automation project of our assembly section, which will start from this quarter, which is Q4, which we believe will have a significant impact on our revenue starting from the next financial year. In line with our goals, we are also looking for ways to grow both organically and through new opportunities to keep our momentum going. We will be focusing on new product development, capacity expansion, and growing the domestic and international project-based sales, which will help us to create long-term value for our shareholders. This has been a transformative time for our company, and with the consistent growth in income, margins, and in operations, we are confident that our focus on innovation and strategic initiatives will help us to grow sustainability in the years ahead. Now, talking about some of the financial metrics in terms of our Q3 highlights, I'm happy to share that for the first time in the history of the company, our Q3 total income stood at 100 crores, which is a growth of 35% on a year-on-year basis. Our EBITDA stood at 22 crores, which is a growth of 48% on a year-on-year basis, and our EBITDA margin was at 22%. Our PAT for this quarter stood at rupees 15 crores, which is a growth of 68% on a year-on-year basis, and our PAT margins for this quarter was at 15%. Talking about the 9-month highlights, our total income for the 9 months stood at 287 crores, which is a growth of almost 18%. Our EBITDA stood at rupees 62 crores, which is a growth of 25%. And our EBITDA margins for the entire 9 months is at 22%. Our profit after tax for the 9 months stood at 41 crores, which is a growth of 30% on a year-on-year basis. With this, I would like to conclude my speech and open the floors for Q&A. Thank you so much, everyone, for joining the call.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Surabhi from NV Alpha. Please go ahead.
Hi, congrats on a very good set of numbers. I have a couple of questions. The first one would be, what kind of capex are you going to put for the miniature metal bellows, which is, I think the capacity is 240,000. And additionally, apart from that, what kind of capex is going to be in the subsidiary and also for the 35 lakh meters expansion that you're doing in hoses?
Yeah. So in terms of the capex, for the miniature metal bellows, we've planned a capex of approximately 23 crore rupees. For increasing our capacity in the stainless steel hose and threading from 16.5 million meters to 20 million meters, and also adding the assembly stations from 40 to 70. Plus also robotizing and automizing a lot of the welding process. The entire capex for this particular stainless steel hose division would be about 54 crores. And then in Hyder, we had budgeted a capex of 18 crores 2 quarters back. Out of that, we have spent approximately rupees 6.5 crores, and the remaining 11.5 crores would be spent over the next 1 year to upgrade the facility of Hyder, plus also for adding new machines and new equipments that will be utilized in Hyder. So that is the overall capex plan from now up until March 2026.
Got it. And another question, how is the margin profile different in the miniature metal bellows from the regular ones, and between assemblies and just the hoses, what is the margin differential currently?
So in terms of miniature metal bellows, so these are similar to metal bellows in terms of the design aspect, but it is just that they are smaller in size with more higher precision. The margins in this particular bellows, which is of smaller size, tends to range anywhere between 30 to 35% on an average. And in terms of the hose and the assembly, so the margins in the hose business ranges anywhere from 15 to 19%, and in the assemblies it ranges from 22 to 25%.
Got it. That's all from my side. Thank you.
Thank you so much.
The next question is from the line of Aman Agarwal from Carnelian Capital. Please go ahead.
Sir, thank you for the opportunity and congrats on a good set of numbers and the capex plans.
Thank you, Aman.
The first question was on the metal bellows project which we have recently commenced, right? So is the plant going as per our expectation, or are we facing any issues, and have we started trial production and approvals with customers? If you can highlight a bit on that, sir.
Okay. So yes, we have already started the production at our metal bellows plant. We have already applied for the certifications and we have sent a lot of samples to our customers for the approvals. we have already started to receive orders from the domestic market, and we have already begun the dispatch of the same. We are in talks with a few customers for the orders from the export market, and we are expecting to receive the same in this month. So, so far the project is on track. Obviously, since it is a highly technical product, there will be an initial gestation period to scale up or to ramp up the production because it is directly linked to the orders from the customer. So we will expect that in the next couple of quarters we can see slowly and steadily the growth in the metal bellows division. And also the miniature metal bellows will also act over a period of the next after 3 or 4 quarters. It will also act as a product basket which we can offer to our customers.
So like on the metal bellows, like how do we see capacity utilization basically? Like by end of this year, where do you expect to reach, and like when do you expect to fully utilize it? Like any time period you are looking at, or any internal targets?
So ideally, I think we can expect the optimum utilization of for the metal bellows in the financial year of 26-27, because right now we have just started. So FY25-26 would ideally be the first full year for that particular business. So in terms of peak utilization or optimum utilization, we can look at FY26-27 will be the year that we will reach the optimum utilization for bellows.
And so when do we break even in this new plant? Like we've spent 40 crores for this project. So like at what level of utilization do we break even, and like anything on that side? And do we achieve that in financial year 26 itself, or like would that basically drag down to FY27?
So in terms of profitability and breaking even, we would definitely be profitable from the metal bellows business starting from the next quarter, which is Q1 of FY26 itself. Obviously, in terms of the return on the or the ROI, on the investment, I think that would be generated in the financial year of FY26-27. Because in terms of the capex that we have done, right, we have also purchased a lot of quality control machines, right, which will be a part of both phase 1 and phase 2. So some of the capex for phase 2 in terms of the equipments, in terms of the quality control, and in terms of certain testing equipment, right, we have already purchased for both the phases. So hence the ROI on this investment would be achieved in FY26-27.
Understood, sir. And so like what milestones will we be waiting for before going ahead with the phase 2? Like what level of utilization we want to reach, or like how much order book we want before we go ahead with the phase 2 for metal bellows?
So in terms of that, there'll be a couple of factors that will depend in terms of our expansion in phase 2. So one is, as I mentioned, even in metal bellows, so there are various sizes that are being produced, right from 50 to all the way, up to 3000 right? So we will be doing the expansion of the phase 2 in terms of a phase manner, depending on what sizes that are we, getting the most orders from. So say for example, if we get a lot of orders, say in terms of the 500 size, and if our machines, for the 500 are being fully utilized, then we would spend on getting the machines which can produce 500 of bellows. So in that manner, like the phase 2 of metal bellows, there would be a project which would also depend on the results of the phase 1 in terms of what kind of machines and what sizes of the machines that we want to order for phase 2.
Got it, sir. So a question on the miniature metal bellows. So like,
sorry to interrupt, Mr. Aman. Could you please come back in the queue for further questions?
Sure. Thank you. Thanks for your answer.
Thanks, Aman.
Ladies and gentlemen, in order to ensure that the management is able to answer questions from all participants, please limit your questions to 2 per participant, as there are several participants waiting for their turn. The next question is from the line of Deep Gandhi from iThought PMS. Please go ahead.
Yeah. Hi, sir. Good morning. Congratulations on very good set of numbers. My first question is regarding exports. So if you can talk about the reason for slower growth in exports for the last 9 months, and what is the outlook for the export business growth in FY26?
So if you see in terms of the growth on a year-on-year basis, right? So as compared to Q3 of FY24, our exports has increased. Obviously, our domestic sales has increased in a much higher ratio as compared to our export, but there is also the growth in the exports business. In the domestic business, we have seen from 2-3 large project orders from the oil and gas in the steel from the steel industry, which is the reason for the uptick in the domestic sales. Also, if you see that in terms of a lot of the project orders that we got in Q3, we have been working on these project orders for the past almost 6 months, and the results of it actually came in Q3. So hence, even now that we have been working on certain orders and certain projects whose results may come in Q4 or maybe in Q1 of the next financial year. So there is no degrowth in exports. It's just that domestic has grown slightly higher as compared to exports.
Yeah. So just 2 follow-ups on this. First, if you can talk about what is the life cycle of those new projects which you have got in the domestic? Are those like long-term 2 to 5 year projects, or is it like one-time supply and then you will keep supplying the replacement demand? That is the first one. Yeah, sure. Please go ahead.
Yeah, please continue with your question. Then I'll answer.
So, yeah, sure. And the second follow-up was on the margins, because in the past, I think you've explained that the margins in the export business are higher as compared to the domestic. So if the domestic business keeps growing faster, how should we think about the margins going ahead?
Yeah. So in terms of the project orders, right? So these orders are, for a specific project, and once executed, the replacement demand for the same would probably come in the next, financial year or within the next 1.5 years. In terms of the replacement demand, because the replacement demand would come when the project is completed and it starts to run, and then obviously there will be repairs and maintenance required for that particular project. So these projects, and so it's not that the projects only come in a certain quarter. We have projects throughout the year. It's sometimes that some of the projects can come in one particular quarter, and then in some quarter you will have lesser projects. So if you see from an annual basis, we get a lot of projects throughout the year. And sorry, what was your second question? I missed out.
Yeah, sir, outlook on the margins, because exports is usually higher margins if domestic keeps growing faster. Yeah.
Yeah. So, in terms of our assembly, so if you talk about both the domestic as well as the export business, right? In both the businesses, we have seen a significant growth of the assembly business. And when I talk about the assembly business has definitely much better margins as compared to our hose and bread business, right? Agree that export has a higher margin as compared to the domestic, but the margin variation in the assemblies when compared to export and domestic, there is not much of a difference. Yes, so there might be slightly few percentage points difference. That's natural, but it is not an extremely significant difference which would have a very negative impact for us. So as long as our sales of assembly business increases, whether it is in the domestic or if it is in the export business, you will see that the company getting good margins in the near future.
Sure, sir. And sir, just last follow-up, you mentioned that you have you are working on some other project business in the domestic side. So if you can maybe quantify the amount of opportunity for which you are bidding for the few projects which you are expecting in future.
Yeah, it's slightly difficult to do that because in terms of there are a lot of projects where we bid. Sometimes we get the order, sometimes we don't get the order also. So it will be slightly difficult to comment on that. So I'm afraid I'm not able to comment much on that.
No problem. Thanks for answering.
Thank you.
The next question is from the line of Praveen Motwani from Bank of India Mutual Funds. Please go ahead.
Hi, sir. Thanks for the opportunity and congrats on the good set of numbers. So just two questions from my end. Sir, what was the volume in Q3 and what was our utilization rate?
So generally we measure our sales in terms of the value because like mentioned, because in terms of the volume, the more the sales of the assembly business that we have, the better the margin for us. And in terms of I can tell you that in this quarter, in the last quarter, which is Q3, we received a lot of the orders from the assemblies business of higher sizes. So there was a higher production of bigger sizes of assemblies. So when I talk about the bigger sizes, I'm talking about starting all the way from 3 inches all the way up to 14 inches. So we saw a significant demand of the higher diameter of assemblies, and hence obviously when we have a higher demand of the assemblies, and we saw the same in the domestic business as well as in the international business as well. So in terms of our expectation, also we have also focused on reducing our inventory. So if you go through the P&L, you'll see that we have focused on reducing our inventory, and that will be the focus of the company also in the near quarters to optimize our inventory so that we have a better working capital cycle.
Okay, understood. And the second question is, sir, what was the revenue of Hydra Engineering in this quarter?
So the revenue for Hydra Engineering in this quarter was 3 crore rupees, and the profit was 36 lakhs approximately. Although the profit, I'm talking about net profit, the profit percentage is approximately 12%, but currently the scale of Hydra is still extremely small. And I think once our entire expansion plan is completed and once the entire facility is running at its optimum, I think we can see a profit in Hydra of close to 15% net profit, 15 to 20%.
Understood. And so in Q3 we have reported 36% top line growth, which is
yes,
than the last 4-5 quarters. So how confident are you, sustaining this number for coming 2 years, or this number is like one-off because there was a higher offtake in the domestic market, or this number is having, sustainable thing to see in the next couple of years?
Obviously this quarter has seen a significant, growth. Obviously, it's the combined effort of the entire team, right? And a lot of the projects were materialized, in this quarter. I would look at our company not from, one quarter, perspective. I would look at us over the period of the next, 2-3 years, because in our kind of a business, if we get a lot of project orders in one quarter, we'll obviously have a very good numbers. There might be, like for example, a couple of quarters back, our numbers were not good because in that particular quarter there was not a lot of project orders and higher value orders. So I would recommend that the community sees us more from an annual and obviously over a period of 2-3 years, because over a period of that time everything tends to average out in terms of whether it's growth in the top line, bottom line, whether it's a bad quarter or a very good quarter. So I would not like to, comment specifically on the growth of this quarter. I would suggest that you look at the company over 1 year and obviously over 2-3 years to understand the growth pattern of the business. I mentioned that we are doing a lot of investments in terms of new projects, new developments, new products, new initiatives, a new product segment, a new market, building our team as well. So, we are looking at our company over the next 2-3 years to plan. I hope I was able to answer your question.
Yes, sir. The current participant has been disconnected. We will move
okay.
to the next question. It's from the line of Chirag Shah from ICICI Securities. Please go ahead.
Yeah. Good morning, sir, and congratulations for a great set of numbers. So, though you mentioned about exports, but can you throw some more color on how the demand in the export market is, and probably which geography is looking more stronger to you and which segments? I think mainly we supply mostly to the US market, and probably we have not scratched the surface of the kind of opportunity that market has thrown for us, has thrown in for us. So can you just throw some color on the export markets?
Yeah. So in terms of our export markets, US is by far our biggest market now in the export, followed by the European region, and we have seen a significant uptake from the US market. Europe, obviously, we all know is going through a little bit of a rough patch right now. Although we have not seen a significant downfall in the European business, but in terms of the demand that we had expected to come from the European region, the growth in Europe is not as much as compared to the US market. But I'm sure that if hopefully with the new policies that will come up in the US, I think the demand in the US is definitely going to grow because if industrialization becomes a big point in the US, our products are definitely would be the ones that will be utilized, or there'll be a higher demand for our products in the US market. We are also tapping into the untapped markets right now, which is the Middle East and Africa. Although the base is very low right now to comment on much, but I'm sure that over the next, I think 3 to 4 years, you will see that even the Middle East and the Africa market would be a significant contributor to our export business.
So my second question pertains to your EBITDA margin guidance for FY27. So is my calculation right that if all your new product development starts flowing in terms of revenues plus your share of assembly business rising the way it is right now, way beyond expectation or earlier than expectation, then probably a 25% kind of a margin is doable by FY27, because the kind of the rate at which our product mix is changing in our favor for the positive, then probably is 25% a doable number for FY27 in terms of margins.
So last year we had set out a target of increasing our EBITDA margins by approximately 100 basis points, every year. I think for this financial year we are in line with achieving our target, of the EBITDA margin increasing by about 100 basis points. Now, if you take that average, I think by the financial year FY27, we should be close to about 24% to 25% range. Obviously, hard to pinpoint on an exact margin number, but yes, in the next 2 to 3 years, we are expecting about 200 to 300 basis points of growth in our EBITDA margins, and also the similar pattern for our profit margins as well, our profit after tax margins as well.
No, because I'm coming from the point that metal bellows is still not in our product portfolio in terms of revenues. So if that number starts flowing in from FY26 and 27, where margins are 30% plus on an average, both taking the normal bellows and the miniature bellows, then probably 25 quite doable number in terms of mathematics. Obviously, there are a lot of variations on the ground in terms of, but again, mathematically, I think 25% can be a doable number for you.
Yes, ideally we would want to have 24-25% even, for example, margins in the next year itself, right? But being on a conservative number, I think your point is correct that by FY27 we should be in the range of 24-25% EBITDA margins on a conservative level. Our internal aim is to definitely achieve it much before that, but being on the conservative side, I think FY27, yes, we can try to achieve our margins.
And my last question pertains to the resolution that we have passed in terms of raising funds via QIP or equity issuance. And if I look at your capex plans, they are mostly funded via internal accruals. So is my assessment right that you guys are looking at some inorganic opportunities? And if yes, then what could be the area of acquisition and whether it will be an international acquisition or not? Because US as a market can be an easy cakewalk for you if you have some facilities out there.
Yeah. So first of all, nothing would be an easy cakewalk. Honestly speaking, with the market is tough, and even the US market, which has a lot of potential, right? The market is it's tough to penetrate. But yes, in terms of inorganic acquisitions, as you mentioned, that we have already done one inorganic acquisition in this year itself, which we had planned to expand into the fittings business. There are obviously a couple of discussions ongoing in terms of inorganic acquisition. Unfortunately, until and unless anything materializes and is approved, we'll not be able to comment much on that. But in terms of the QIP, so our capex is not linked to the fundraise that we are planning from the QIP. Our capex will be funded mostly by internal accruals, and we have obviously obtained the approval from our shareholders in terms of raising the funds from the QIP. The exact amount and the utilization of the receipts of the QIP will can only be discussed once it is approved by the management and the board. So it will be difficult for me to comment specifically on the use of the funds for QIP. But yes, we as a company, we are always looking out for opportunities for inorganic acquisitions, both in India and in the international market. In the international market, I think specifically the two markets of USA and Europe are the regions that we are actively looking at opportunities. Obviously, if I talk about the international market, it will definitely be in the forward integration, where we'll be acquiring a company which has its base in the US or in Europe. And if it is in India, mostly it will be an acquisition in terms of a backward or into some product which are adjacent to our business. So beyond that, I will not be able to comment much on that, I'm afraid.
Okay, sir, that was quite helpful, and that's all from my side. All the best for the future.
Okay, thank you so much.
The next question is from the line of Saurabh Butra from IIFL. Please go ahead.
Thanks. Thank you for giving me the opportunity, first of all, and congratulations for your good set of a number. So almost all the question has been asked. So I just wanted to ask on your color on what is the demand outlook you are having in the USA market. Can you throw me the color on that after Donald Trump coming into the US election, if they have come?
So I think for us, so say for example, if Mr. Trump does not do anything, as well, still the demand for our product is seeing a strong, there's a strong demand for our products in the US market. And if like how everybody is expecting that Mr. Trump would focus on made in America products, right? So in that case, also if there is higher industrialization in the US, which would also mean there will be a higher demand for our products. And that's why we are also seeing that over the next few years, the US would continue to be the biggest market for us by far. And obviously, our efforts, our directions have been uh, towards increasing our presence in the US. And in the future, definitely, we will have certain base in the US. Now, whether it is through organic or through, inorganic, that only time will tell.
Okay. And can you tell me what is the current debt right now in your book?
Zero.
Yeah.
We are debt free. Yeah.
Okay. Thank you.
Thank you.
The next question is from the line of Prathamesh Tiwal from Tiger Assets. Please go ahead.
Yeah, sir. Just a couple of questions, if I missed it earlier. So what was our capacity utilization on, I think, 16.5 million capacity?
Yeah. So we completed about 16.5 million capacity by the end of the last quarter. So in this quarter, sorry, in Q3, the capacity was approximately 15 million meters only. So because the additional 1.5 million meters capacity was commissioned in almost towards the end of the quarter. And if you look at our utilization, so our utilization is ranging in the range of around 82 to 85% in this year.
Okay. And sir, if I just wanted to know on the revenue mix side, so from which all different segments or from which all different industry do we get maximum revenue out of?
So there are 3-4 major industries that we get the bulk of our revenues from, right? So it includes your traditional industries, which is oil and gas, chemical, petrochemical, steel industries, and then the new age industries, which includes firefighting equipment, solar. We have also supplied some of our products to one of our customers based in the Netherlands, who has then supplied our products to the machine manufacturers who manufactures machines for the semiconductor industry as well. We have also started to penetrate into the automotive segment, wherein we have supplied some products to the construction industry, the construction machinery industry. Sorry. So there are sectors that we are penetrating now in the near future. And obviously, there are some sectors which are the core for the company, which has been the backbone of the company over the last 5 to 6 years.
Okay, so as of now, if I wanted to know regarding in terms of percentage, so which sector contributes the most? If you can talk in terms of percentage, it will be really helpful.
So exact percentage, I think the new age of the sprinklers business, it contributes about 26%, and very close to that is the steel, which is about 24 to 25%.
Got it, sir. So this last question: after doing the expansion, how much time it takes to ramp up the utilization or take the utilization to peak levels?
So ideally, it takes so once the machinery is commissioned and once it is into the production, ideally it takes anywhere between 3 to 4 months in an ideal scenario to for the capacity to be up and running at optimum level. It may vary depending on the size of the machine. So for example, generally, if a machine is producing a smaller diameter, it tends to be, in operation and at optimum utilization faster. But if the machine is, that we have got, if it produces a higher diameter of holes, then obviously the utilization at the peak level tends to take some time, but because the orders for the larger sizes tend to be, in smaller quantities.
Okay, got it, sir. Thank you. Thank you so much.
Thank you so much.
The next question is from the line of Lokesh Maru from Nippon India Mutual Funds. Please go ahead.
Thank you. Congratulations, sir, on excellent set of results this quarter. Two questions from my side. Obviously, there's a lot of CapEx, right, expected in the next 2-3 years. So if you could help in just number if you could put a number to the CapEx in terms of, FY26, 27, or whatever, what is the combined CapEx amount that you are going to spend in the next 3 years? So today, for reference, today we have a gross block, I think, of 160 crores. So this gross block will turn into what number in next 2-3 years?
Okay. It will be difficult to give a number on terms of how much will the gross block increase, but I can share with you a few numbers which might be helpful for you. So the last capex that we had planned, and before this capex was approximately for 82 crore rupees, which included expansion of the capacity from 11.5 millimeters to 16.5 millimeters. Also included additions of assembly stations for composite hoses, for metal bellows, and the entire, basically capex of the entire company, which also includes the solar project that we have commissioned, and so on and so forth. So I'm happy to share with everybody that out of the budgeted capex of 82 crores, we have completed all the projects as planned over there at a total capex of 75.5 crores, which means that we have had a savings of about 6.5 crore rupees. So the entire capex up to 31st of December 2024 was completed, and your company had a saving of approximately 6.5 crore rupees on that capex. Now, in terms of the capex for from now on till March of 2026, like I mentioned, there will be about approximately 54 crore rupees spent for increasing the capacity from 16.5 millimeters to 20 millimeters. Along with that, increasing the assembly stations from 40 to 70, and also the installation of the automized welding stations, which would start from this quarter. And obviously, once we get a few machines up and running, we will be our aim is to build up the automized line as soon as possible. And then the miniature metal bellows, it will involve a capex of about 23 crores, which will be used to for the machinery and for the other equipment that will be utilized for manufacturing of these miniature bellows, and also ultimately for converting the bellows into an end assembly product. Also, like I mentioned earlier on in the call, that we had projected a capex of about 18 crores for Hyder. Out of that, we have spent approximately 6.5 so far, and the remaining would be spent in the next year and a half approximately.
So if let's say, yes, sir.
Sorry, and for the financial year FY27 and beyond, so unfortunately, since our board has not yet approved it, so it will be difficult to give a number to everyone right now.
Correct, sir. So if my understanding is correct, this year we have done 75 crores already since March till December, right? And we are on track to do 54 crores, right? So this is on top of our 150 crores of gross.
This financial year we have done approximately 67, remaining about 7. So the difference between 75 and 67 was done in Jan to March of last year. So when I talk about the total 75, it is right from the day we planned the capex. So it includes like a few quarters of the last financial year as well.
Understood. And we are yet to do 54 crores and 23 crores and 18 crores. That's it, right? And all this is supposed to be done within next 1 year.
Till March 2026. Yes.
Okay. Understood. Thanks a lot for this. Lastly, so on exports, since export has been like, let's say, a growth of 10 odd percent, that is one. Another is, given the kind of CapEx that we are planning and that we have done, are we confident of achieving round about, let's say, a 20% growth in terms of volume or value, right, for the next 2-3 years?
So, in terms of our growth, so if you see that our focus always, if you see in my previous commentary as well, right, our focus always has been on the margins, because we are in an industry which is more of providing highly technical products. And hence our focus always has been how we can improve our bottom line, because in terms of the top line, right, our aim obviously is to grow our top line, but the focus of the company over the past 4 to 5 years has been to not only increase the top line, but with a more significant focus on increasing the bottom lines. Now that happens through value-added products, new product segment, and obviously in terms of the new product segment that we are entering. And if you see that in terms of our profit growth also, right, our EBITDA margins has grown by 25%, in this year on a 9-month basis. And if you see our PAT margins, they have grown by 30%. And our aim is that over the next 3 to 4 years to grow in our in terms of our EBITDA and in terms of our PAT margins. And with that, simultaneously you will see a growth in the top line as well.
Understood. So EBITDA growth is something that we should be focused on.
Yeah.
Okay.
Yes.
Okay, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, this will be the last question for today's conference call. It's from the line of Prem Lunia from Astute Investment Management. Please go ahead.
Hello. Yes, sir. It was great that you had such great numbers. Congratulations on that, and also on the project orders and the high tech order. So most of the questions have been asked. I just wanted a picture on how much can be the revenue contribution from the metal bellows, because it is considerably the miniature metal bellows, which is around 5% more EBITDA margin compared to the normal bellows which we are doing now. So what can be the revenue which this can clock, let's say at the peak whenever the utilization comes in?
Yes. So right now we are with this expansion of the metal bellows, miniature metal bellows as we call it, project. So we are expecting a revenue of approximately 25 to 30 crores at its optimum capacity in terms of the revenue on an annual basis.
Okay. For the miniature metal bellows, and for the metal bellows, we already have around 80 to 90 crore of.
Yeah, 80 to 90 crores.
Right.
Yeah.
Also on Hyder's front, I wanted to understand what can be the guidance on that front in the revenue numbers.
So obviously this is the first year of the operations of Hyder. So in terms of the potential, I think next year we would see the real growth of Hyder, and we expect that over the next couple of years, the top line of Hyder would grow to about 40 to 50 crores over the next couple of years in terms of the top line.
Yeah, I also wanted to understand this, that last time we gave a guidance of 16.5 millimeters. If there is a best case scenario of 50% of assembly business which we are currently reaching, that would result into almost 500 crore of number, because in this business we can't quantify it in number of units or meters, so it is the revenue which we have to look at. So on 20 million meters, what would be the optimal sales in the optimal scenario?
So if we talk about 20 million meters, right, and if we talk about, I'd say so currently our aim is that over the next couple of years to to have a higher portion of the business coming from assembly. So say for example, if I assume that if I get 70% of my sales from assembly over the next couple of years, after 2 years, so then we are looking at a revenue potential of anywhere from 650 to about 675 crores at peak utilization.
Right. I also wanted to get an idea of the steel which we use. Also on the price, what it fluctuated in the last quarter, and also how much of the steel which we use is being imported, or mostly within.
We use stainless steel. Obviously there are different grades of stainless steel that we use. Wide range of grades of stainless steel. There has been minor price fluctuation in the prices of the stainless steel raw material in the last quarter. Maybe like a few percentage points, which is not of extreme significance. Right now, so what we are doing is right now we are still predominantly importing the stainless steel coil. While the stainless steel wire, we are buying 100% locally from India. In terms of the last quarter Q3, we slightly increased our procurement from the domestic sector, especially of the sizes wherein we had to produce a larger diameter of hose. And hence, in those particular segments, we had to rely on the domestic procurement because of the delay in the supply chain from the international market. And hence, for the higher sizes, we procured slightly more from the local market. But overall, still, import is in terms of the stainless steel coil, import is by far the biggest contributor in terms of raw materials.
Right. And most of this would be from China?
Yeah, most of it is from China, but it's actually an American company which has its joint venture in China. So,
okay. Right.
Yes.
Also on the metal bellows, last question. Like we had a capacity which we were going to do of 25 millimeters to 600 millimeters, which was guided. And now what we are saying is that the normal ones would be 50 to 3000 millimeters. And miniature would be 10 to 15 millimeters.
10 to 50, yeah.
So are we seeing a growth in the size of the thing as well, and also in the miniature? In the normal bellows, are we seeing that there will be orders of larger diameter ones where we can have better margins, let's say the upper guidance of 25 to 30 in the bellows?
So generally, when I just talk about the metal bellows, right, as a product, so metal bellows as a product generally goes in high diameter. Miniature metal bellows is a specific category of bellows where it is used, for applications where there is the precision components are required. All right. So in terms of our, obviously the miniature ones would come in, in this calendar year, say by the end of this calendar year or by the next call, by Q4 of FY26. So right now our focus would be on selling of the metal bellows, which is of the larger sizes, right? Like ranging from approximately 50 mm all the way up to 3000 mm. So that will be the focus right now, because miniature would take time to come in. It will not be something that we will start in this quarter, because once we get the machines and once we get the equipments of that particular product, only then we'll be able to start the sales of that particular product.
Right. You can give some idea about the application industries of both the things so that we can get some idea.
In terms of metal bellows, right? Bellows are used. Now when we talk about miniature or metal, I'll talk to you about the application industry for the entire bellows space per se. So the power sector is a big buyer of metal bellows. The steel industries, the steel plant, petrochemical industry also buys metal bellows. Then the turbine industry and the shipbuilding industry, they buy bellows for their ships and for their turbines. Metal bellows is actually also used as an exhaust system in the automobile industry, where it is used to it is used for the exhaust gas systems, and and the miniature ones are used in certain precision industries, as well, which is your laboratory equipment, your robotic industry, where they require very small size bellows. Some of the electronic manufacturing industry buys bellows, and then obviously space and the aviation industry is the one where there is a requirement of bellows. Obviously, our plan is that in the future we would look to tap into these new age, I would say the new age, or the future industries, of the world. And the bellows are also used in semiconductor, in the semiconductor machines. So the machines which manufacture the semiconductor equipment, right? The bellows are used in those machines as well. So there is a wide range and a wide application of metal bellows.
Sure. Thank you so much. These were the questions. If there's any, I'll connect with you. Yeah. Thank you.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question for today's conference call. I now hand the conference over to the management for their closing comments.
So, thank you so much, everyone, for joining the call today. I would just like to also update on one point where there was a question with regards to our QIP as well. So, in terms of the aim of the company and the management itself is, obviously we are planning to do a fundraise, of the details of which once finalized by management and the board will be shared with the investors. But before that also, as I already highlighted in my speech, also I would also like to highlight that as a company we are looking to grow, not only in terms of our product segments or our manufacturing capacity, but also in terms of our manpower. And when I talk about manpower, I'm talking especially about the top level management of the company. And we feel that for us to grow to the next level and to reach that scale that we are looking at, we have to deploy more professionals on board. And hence, we have appointed Mr. Kiran, whose task would be, or whose main responsibility would be to make Aeroflex from an Indian company to a multinational company with presence across the globe. And he brings with himself a huge experience of more than 37 years in working specifically with MNCs. And I'm confident that with him coming on board and with more people that we have planned to hire over the next 1 year, I think the entire team would be able to take this company to the next level and truly be a multinational company based out of India. So I just wanted to highlight that to everyone. And lastly, again, thank you so much everyone for joining the call today. If I've not been able to answer any questions from anybody, so you can get in touch with us, or you can get in touch with SGA, who's our investor relation advisor. Thank you so much everyone, and hope you have a great week ahead.
On behalf of Aeroflex Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you so much, everyone.